Alpine Liquid Fertilizers is your full-season crop fertility specialist from start to finish. Visit alpinepfl.com for more.
Hi, I'm Bernard Taub, and welcome to Real Agriculture. Today I'm at the Southwest Ag Conference, University of Guelph, Ridgetown campus, and I'm joined by Ben Buckner from AgResource Company. Sir, how's it going?
It's doing well. How are you, sir?
I'm great. Hey, thank you. You're up from Chicago. We're going to talk markets. Before we get there, hey, tell us a little bit about the company.
Yeah, sure. AgResource started about 35 years ago, and we chose to sort of fill the role, no brokerage, no trading, no farming. All we do is economic research and forward price outlook. So the business model is kind of get it right or go out of business.
Well, it's like a lot of people and farmers, and we're here at Agriculture. Let's talk some commodities. Let's talk about the markets. A lot of things to consider. Give us a big picture here, Ben. We've got chaotic weather. We've got lack of demand. Where are we right now in January 2025?
Yeah, sure. So we're always in some kind of cycle. It's boom or bust. That's how it's worked for a century. We're kind of in the deflationary period here, and I think our biggest issue is the lack of a demand driver. So of the last 15 years, we've had ethanol, the advent of the ethanol industry. Renewable diesel also has been a pretty big deal. We're kind of struggling to see what's next. And so we know that we've produced enough 2024 and 2025. Supplies are adequate, abundant in some markets. And so it's kind of our job to figure out in the next, let's call it 24 months, what changes that. Yeah, that's the one thing that we really struggle with, that, we talk about China, sort of emerging markets. I don't think they're going to bail us out of this time, so it kind of comes down to supply and weather.
Well, let's talk about, I guess, the general landscape here of different commodities. I mean, there's obviously corn, soybeans, some of those row crops were challenged, but hey, there's opportunities in beef and dairy and other places.
Yeah, I think so. Food markets, too. I think end users, food companies do well. Just, costs of inputs is down, pretty deflated. Corn, wheat, soybeans, even vegetable oil markets today. And I think one of the markets that we can't solve, and kind of the opposite side of row crops, would be the livestock and dairy markets. Protein and fat, I think, is going to be the big story in 2025. We don't have a lot of cows in North America or in the world. We're struggling to grow milk production really above 2021 levels globally, especially in the United States. And so I think that's very positive outlook for milk. Beef, too. I don't think we see any change in replacement animals, and that probably doesn't happen until maybe 2026 is when that cycle corrects. So it should be a very, very good year, I think, for the ranchers and the food companies.
Yeah. Hey, let's talk about some of these row crops. You talked about a lot of things to consider here. There's drought. There's a lot of things going on in the market. Obviously, demand. You talked about sell rallies. There's opportunities here.
Yeah, I think so. So again, acknowledging we're in this deflated part of it, sort of the agricultural cycle. We don't see the demand driver, but there are new risks, I think, that we didn't face 15, 20 years ago. And we've kind of observed over the last 7 or 8 years, climate patterns worldwide have been very chaotic and very abnormal. So I think that kind of comes down to the ocean being the warmest it's ever been, and what that means. It means these new chaotic floods, hurricanes are more intense, drought seems to be more frequent. La Nina today is present. That typically bodes poorly for yields in Argentina, southern Brazil. So we still haven't proven that we can grow global major crop yields. We're on our 9th consecutive year of really flat. Will it be a 10th consecutive year? That lingers in the background and does give us a chance, I think, to sell those rallies. And so when you do see fear, supply premium addition, that gives you the chance to sort of leverage that into managing forward risks.
Yeah. Let's talk about that demand problem. And obviously, we talked so much about China, and you talked today a lot about Chinese population growth and the economic growth. Going from 16% down to 4%, declining birth rates, and we can't rely on China as much as we used to.
Yeah, that's correct. I mean, let's isolate corn, for example. China imports went from 5 million tons to 30 million tons between 2018 and 2020. I think the core of the issue, and again, this is kind of not being discussed enough, we think, is just China's population is contracting. That is abnormal for a country or a market. Venezuela, Ukraine, Russia, that's kind of the big list of where population is shrinking. So consumption's down. I think imports of baby formula down. That kind of serves as a proxy and tells us that this thing is evolving that way. So we don't think China's going to buy nearly as much corn, soybeans, or wheat just because they don't need it. So we're seeing population shrink. Imports are down. You count boats going to China; those are down pretty substantially on last year. And then China's domestic crop markets are also pretty deflated, like everywhere else. So it doesn't seem like they need the stuff now. So that's, I think, our chief concern demand-wise.
Yeah. And there's also a labor issue here too, as well, right?
Yeah, so population growth, it's occurring very slowly in a lot of the developed world, and so labor market's tight, going to stay tight, and so we kind of couple that with what we think will be pretty elevated energy markets. Inflation probably tough to solve, and does that mean interest rates kind of stay where they are?
Yeah. What about, I guess, obviously, when we think about China, we also look for other demand markets, and we always tend to lean on Mexico and other places, but maybe there's not enough there to pick it up.
Yeah, there's not. I mean, we think the worst case scenario is China just does what it has to do to kind of honor its World Trade Organization commitment, and that's well down from where they've been the last couple of years. So you could lose 30 million tons of import demand in China, and then that just can't be offset by growth that we are seeing in Mexico and Vietnam, parts of sub-Saharan Africa, just not even close to replacing that.
Yeah. What about, I guess, the other side of the coin? Everything from the cost of the dollar, crude oil. There's so many other things that sort of work with and flow through this market. Yeah,
sure. Currencies, I think, is the second issue that's underreported, we think. If the dollar is strong, it kind of tells us that currencies elsewhere are weak more than anything else. So when you look at, Egypt's really struggling to finance purchases of wheat. China, their currency is pretty weak, so they can buy fewer tons of soybeans at the same price just because their purchasing power is down. That's probably something that continues for 2025, so it's going to be hard to really grow discretionary purchases. Right. We think no one's going to purchase wheat like Egypt or Algeria for fun because financing issues, purchasing power is down, currencies are weak.
A couple questions, and these are actually the type of things that people in the audience were thinking today. Plant soybeans or corn? This has been a long conversation in recent months.
Yeah, I think plant what you grow best, of course, but we do think that the current market structure, more people will plant corn in 2025 and fewer acres of soybeans. That's kind of what the market needs. We need fewer acres of soybeans and more acres of corn. So kind of, I think the strategy is, it makes sense. I mean, corn's close to break even in some places, so that's a pretty easy decision. We just want to manage that risk ahead of time. Right. So we think we've got until seasonally, March, April. If you are going to plant more corn, make sure you've got a pretty good portion of that forward sold before you do it. Because you could wake up, March 31st, the USDA's planting intentions report. Maybe we add 5 million acres to U.S. corn plantings. Right. That turns bearish corn, and so it's kind of stuck here. But yeah, I think we like planting corn, selling it in advance though is pretty critical.
Yeah, but that complex for soybeans looks a little bit more long term.
Yes, yeah. So the issue in the soybean market is we could lose in the U.S. 3 million acres, 4 million acres. Assuming trends that we're seeing, stocks continue to grow. So the market still needs to maybe send a signal to Brazil and to tell them to stop planting, which might be a little more difficult because of weak currency there. They're still making money today.
Yeah. Hey, final question for you, and that is, given all the information that you guys sort of accumulate and assess, I mean, from a selling perspective now, where should we be? I mean, what percentage should we be sold going in January, February 2025?
Yeah, I think, 30%, 40%, maybe even half. We kind of take the attitude of sell and defend. So we like selling on rallies. If there is a weather problem in Canada or the United States, we defend that position with options or something, but we'll address that, cross that bridge when we get to it. Again, seasonally, generally speaking, markets don't tend to break meaningfully until about April or May, so that's kind of your runway. You've got until then, I think, to get a lot of things on the books.
Awesome. Well, Ben, hey, always great to talk markets. Appreciate you taking the trip and stopping by to talk with Real Agriculture.
Yeah, sure. It's my pleasure. My pleasure, sir.